Is there a bad time of day to trade stocks? Maybe. A story in today's Wall Street Journal finds buying and selling by individual investors is heavy in the minutes right after the market opens, which is often the most perilous time of the trading day. Here with more details is WSJ reporter Cory Driebusch. Cory, thanks so much for being with us.
Thanks.
Give us a sense of what's happening in the first few minutes after that opening bell.
Yeah, so in the first few minutes, we see a lot of orders coming from retail investors, kind of mom and pop investors who went home the night before, read the news, decided, I want to sell my stock, or maybe this is the time I want to buy. At that same time, since the market has just opened, the spreads between what people who are selling stocks want for their stock and the price that people are willing to pay are the widest, which means that it could be very costly.
So when does this volatility generally settle down?
You know, we say in our story about the first 30 minutes, but really the first 10 minutes are the biggest time.
So I hear that, and if I'm an individual investor, I think, I'm just going to sleep in. I mean, why start before 10?
The thing is that is what we would probably tell individual investors, but I think it's just habit that at night you put in your order, maybe you're going to work and you can't trade from your work computer. Or
are Monday mornings the worst? I mean, is there a backlog from people who placed orders all weekend?
You know, we don't see the data on that,
right.
But anecdotally we've heard from financial advisors that is when they sometimes will get calls, especially in the last few weeks with a lot of news coming out of overseas markets and a lot of volatility coming there. You're seeing what's happening in other markets, and the panic is maybe it's going to happen in the U.S. too.
So what do the experts you spoke to advise?
Well, besides maybe being more flexible and not saying just sell immediately, there's also this idea, so like obviously waiting the first 10 minutes and first 30 minutes is key. But if you do really need to place that order, maybe do a limit order. Don't do a market order. A limit order means that you're putting strict limitations on at what price you're willing to sell at. What is the lowest price you're willing to sell, or the highest price you're willing to buy?
Try not to dive in when everything is very volatile.
Otherwise, if things are moving sharply, you could get stuck selling at a very low price.
You do not want to do that.
No.
Cory, thank you so much for that.
Of course.